Good day, fellow investors. I listened to Trump's speech at Davos, the 40-minute long speech, and these are his main concepts that I'll also give you a summary before we start discussing them. The key question is, how will this impact investors, whether things will change, and let's try to make sense of all the things said here now below. I'll give the word to President Trump, and then we'll discuss topic by topic.
The result is the worst inflation crisis in modern history and sky-high interest rates for our citizens and even throughout the world. Food prices and the price of almost every other thing known to mankind went through the roof. President Biden totally lost control of what was going on in our country, but in particular with our high inflation economy and at our border. Because of these ruinous policies, total government spending this year is $1.5 trillion higher than was projected to occur when I left office just 4 years ago. Likewise, the cost of servicing the debt is more than 230% higher than was projected in 2020. The inflation rate we are inheriting remains 50% higher than the historic target. It was the highest inflation probably in the history of our country. National energy emergency to unlock the liquid gold under our feet and pave the way for rapid approvals of new energy infrastructure. The United States has the largest amount of oil and gas of any country on earth, and we're going to use it. Not only will this reduce the cost of virtually all goods and services, it'll make the United States a manufacturing superpower and the world capital of artificial intelligence and crypto. SoftBank has announced between a $100 and $200 billion investment in the U.S. economy because of the election result. And just 2 days ago, Oracle, SoftBank, and OpenAI announced a $500 billion investment in AI infrastructure. Other companies likewise have announced billions and billions and billions, adding up to trillions of investment in America, in the United States, are going to pass the largest tax cut in American history, including massive tax cuts for workers and family, and big tax cuts for domestic producers and manufacturers. And we're working with the Democrats on getting an extension of the original Trump tax cuts, as you probably know, by just reading any paper. My message to every business in the world is very simple. Come make your product in America, and we will give you among the lowest taxes of any nation on earth. We're bringing them down very substantially, even from the original Trump tax cuts. But if you don't make your product in America, which is your prerogative, then very simply you will have to pay a tariff, differing amounts, but a tariff which will direct hundreds of billions of dollars and even trillions of dollars into our treasury to strengthen our economy and pay down debt. And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which frankly, I'm surprised they didn't do before the election. That didn't show a lot of love. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us.
Show a little bit of love, smash that like button. But there is so much information condensed in these 3 minutes, let alone the whole speech, and let alone all that Mr. President Trump of the US said. And I found this from Trump's previous campaign leader, how to understand America's politics. Well, he says here how any way to deal with the media and what the media is saying is to flood the zone with shit, in this quote. Flood the zone, stink up the joint, and then it's not about persuasion, it's about disorientation. Now, I think that everything that Trump is now saying has a connection, has a benefit, has also a cost. Like anything in the economy, there is no free lunch, and that is why we need to just go step by step, discuss, and then we can see whether there is a significant impact on investors. Short term, surely. Long term, we have to also check the impact, and then as value investors weigh things. Let's immediately start with inflation, and let me just say that I have no political relation, no connotation. To me, who is the President of the United States is the same, so I don't want to make this a political video. Just let's see how things work. First, modern history, highest level of inflation as said by Trump. Modern history is defined since the 18th century, so it's not the highest level of inflation since modern history. It's the highest level of inflation since, let's say, I was born in 83. So if we calculate modern history since I was born, that is correct. That was the highest level of inflation there, and thanks to Mr. Trump for the love shown to me there. Of course, I'm a little bit joking, but the 1970s were having a higher level of inflation, of course, war years, and I think also First World War there before. But the key topic is inflation down, no matter whether it was higher in the past or not. And then we have to look at the components of US inflation, and you can see here that energy prices, down already for the last year, have been detractors. So if oil prices go lower, then it should even push inflation a little bit lower. However, we also have services, we can say, employment, wages that are still a beneficiary, and with more investments that can also push things higher. We have core goods, and core goods have been a big factor of inflation in 21-22, and now they are detractors. But if you put tariffs on core goods, which are often imported, then that is also positive on inflation. High investments, high spending might push up metal prices, things like that, and then you have, again, a hard situation to solve. But that's the balancing act here. Unemployment rate is 4%. We'll need to balance higher prices, higher cost of investments, and all the factors that Trump mentions will be related to balancing, pushing a little bit here, pulling a little bit there, and then trying to get to a better level, let's say, for the US. Nothing wrong with that, very interesting, but he starts with lower oil, and since that has happened, also peace in the Middle East, de-risking a little bit, Exxon went down 3.6%. Not a tragedy, but it went down. And the key thing here is that with lower oil prices, then Exxon should make less money. But lower interest rates on lower oil prices would make, again, Exxon's dividend more attractive. So that might keep the stock higher. So there are always things on the negative and things on the positive to take account when it comes to these things. If we look at oil, yes, the projected balance for oil going forward is closer to 60, also where oil companies target their plans and projects. So Trump didn't say where will he see the price of oil, just lower. And if it balances at 60, that's already something that the world can live with. Then you have other shocks that can bring it to 40. And there is always volatility in the price of oil. So that is a different story, but it can be, let's say, with a little bit more of production, still keeping the investments at around 60, the promised investments. Not as high, but it can be, let's say, done a little bit. That will give a little bit benefit on the energy part of things. And maybe Exxon will not grow earnings 20 billion on cash flow 30 billion. Maybe that will be 10 billion and 15, but that's then a different story. It is a price regulation thing. So if Saudi Arabia decides to work along and pump more, globally oil prices would go lower, which will benefit also global manufacturing, global spending, so lowering tide would lift all boats. But that's, again, the short term. Long term, lower prices would disincentivate long-term higher cost investments that might lead then to cycles down the road, but that is something in the long term. And not for the short term. Lower oil going into investments, capital into AI and crypto, making the capital global of manufacturing. Now, let's start with crypto, AI, okay, trillions of investments, and we have had the announcement of the Starlight partnership, 500 billion in AI. Immediately Musk says that they don't have the money, but also 100,000 new jobs immediately on those investments is also something inflationary. Yes, you say there are 7 million unemployed in the United States, but 4% rate, it is near the natural unemployment rate. Somebody is moving, the husband resigns, unemployed, things like that. So it is not like you can find many thousands, hundreds of thousands of employees also that need for this kind of manufacturing. So that is always then inflationary pressure. But then you go again on more tax cuts that then help businesses invest and perhaps lower on those inflationary hiring costs, which makes it again more attractive, and tariffs that makes it easier to compete on the US market. If we look at the federal finances projected budget, we don't know yet what will the tariffs be going forward. We'll make the calculation in a second, but lower taxes means that the deficit here of 2 trillion, of which 1 trillion is for interest rates. So yes, the goal is also to lower rates, which will be discussed in a second. But if you lower taxes, then you also lower income. And then the question is, okay, how much can it be saved with Doge? How much can it be earned with tariffs? So that is all things that we have to wait and see, and also depending on the deals that Trump is doing based on his tariff threats or things like that. All in all, it is still projected, especially if there are the Trump tax extension cuts, so that will even push debt to GDP higher, and 7% government debt to GDP is also something that's very important for the economy going forward, and keep in mind that number. Because the more you pay interest, the less you have for other things, and the less you have for other things, the less the deficit helps when it comes to the economy. And this can work, this huge increase of government debt compared to GDP, this can work and has been working, but we don't know for how long. This is the key long-term cost here. 120, 150, 250, you never know, but at some point someone will say it's enough, and then it can change the whole picture. If we go to tariffs, the first presidency, Trump increased tariffs from 1.5% to around 3%. So it's not the 25, 16 or 15% proposed now. We'll see where and which countries will take what deal and how. So that's something that we'll have to see. But even if we put 15% taxes on the 3.2 trillion imported by the US nation per year, that will be, let's say, 450 billion in tariffs. The thing is that if you go back to this, who is going to pay the 450 billion here for the government? It's not the exporters, it's the importers. If Costco imports a container of things, then when it comes, then someone has to pay the tariffs. It's not like the exporters will just lower their prices 25% and say we'll cover the tariffs. No, that thing will also increase prices, and at the end consumer is who is paying. Maybe they will choose to buy more domestic things, okay, which then also, if the domestic thing is more expensive, creates pressures on inflation. So at the end, it's the consumer that pays, so that tariffs, it's not that easy to implement because it can be then again inflationary, which would not allow the Fed and to lower rates, which would again put cost of that higher. So it's a very delicate slope there for the government, and even if they push rates higher, imports would go lower, and also tariff income would go lower fast. So everything has its own reflexivity. The next part is interest rates to drop down, to lower interest rates, and the Fed has already started doing that, maybe pausing a little bit now, but the plan is for rates to go lower. The thing is that there are short-term rates, the short-term rates that the Fed is setting, and there are long-term rates. The market sets the long-term rates for US Treasury. With the deficits, with everything, with the Fed lowering rates, which means more money, more incentive, more inflation. The long-term rate, since the Fed started lowering rate, went up from 3.6 to 4.6, closely going to 5. And the thing is that if you look at the economy, if you look at this, the economy is doing great. The US economy for the last 2 years has done 3%, which is great and above expectations. So it's not that easy to lower rates without inflation. And then we have also think here saying how the US economic strength make it possible for rate hikes in the future. 5.5% treasury, that would completely change the plans there and make it hard for the Fed to lower rates. And there is also a key factor here. If you look at economic growth, 3%, a good economy, but if I go to the deficits, and this is 7% of GDP, 7% of GDP spending on debt helps surely 3% growth. So all else equal, at best, without government deficits, the real growth of the US economy has been zero for the last 2-3 years. So this good economy, and here even Trump might be right, the economy is not good. Without the debt, the growth of the economy is zero. So therefore all the investments and things like that. But here we come to trying to make sense of it. And first, in economy there is no free lunch. If you do this, it has repercussions, short-term, long-term. So there is always this fine balancing. Of course, if you can push more levers to benefit you, great, you have to do that. There is nothing questionable about it. But we also have to look at the fundamentals, the long-term debt cycle, the costs, and what can happen when things change there. If we go to federal debts, those are just piling and piling. If we look at the fundamentals, the Fed is forced to lower rates in a great economy because the huge debt pile globally, that if it becomes a problem, it will drag the global world into a big recession. As the long-term debt cycle reverses, sooner or later it will revert. But with all these deficits, with all the borrowing, we need lower rates because interest, as Trump said in his presentation, costs are 230% higher than a few years ago because interest rates are going higher. You can only borrow for a certain period of time, and you need, if you borrow at 7% deficits, you need 7% growth to, let's say, cover for that, not free. Free is not enough. And when it comes to investments, a billion here, billions and billions, it all depends on the return on investment. So there is the price you pay, and there is what you get returned for it. That's the key when it comes to investing. Everybody is big with their mouths, but slow with their money. And then when it comes to the situation here, we have debt assets, bubble. They will try to continue to do it as long as it goes. There is no other way. Until it can't be pushed forward, then the spiral might backfire, maybe tomorrow, maybe in the decade, and then, well, the only way has been done in history is to print, and that's it. Higher inflation down the road, maybe tomorrow, maybe in 10 years. That's the long-term consequences of all of this, not Trump's. It is simply how the global developed world system is made now. It works until it doesn't. I'm looking forward to Ray Dalio's fourth chapter now that to be published that will really see how the mechanism, how the machine works on the current situation, and we'll do a video about that. But when it comes to investing, we may have lower rates for the next 2 years. We may have higher rates, and we might have slower economic growth, faster. We don't know. It's impossible to know. It's simply hard to predict because of all the moving factors. So my message is always to be on both sides. If interest rates are lower, fixed rates mortgage for 30 years, now at 7% it's a little bit high, but in Europe you can still get it for free, which is free money. So it's all about also timing, when, and change and see where are the opportunities. The key of everything for us is value investing, margin of safety. So if things go wrong, rates go higher, am I okay? If things go right, am I okay? So that is how a value investor is always positioned, so that no matter what happens, things are good. I hope that we all live in a better world year after year, and I invest so that whatever happens, I am okay. There is no other smartness to it.